You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. I'm back. Listen, we've been talking about this for a while now, that the Fed has just been wrong. And now the numbers prove it. Look, when you ask and you shall receive, the Fed has been saying for the longest time that, our dual mandate is prices. We got to keep inflation in check. 2%. Not really sure. You talked to Steve Flanagan on Monday. He asked the same question, like, why is it 2%? Who arbitrarily made it 2%? Well, the Fed has the ability to do that. They have the right to do it, but why 2%? Now you just saw the numbers of, again, producer price indexes, the people who make the actual stuff, had an upwardly revised 0.3% in the previous period, which was below the forecast of a 0.2% gain for this time. So we are literally seeing disinflation. That is a problem. We don't want to see. We don't want to see going backwards, right? We always want to see forward movement a little bit, but we don't want to. We want to keep it in check. That's what the key is keeping it in check. So when the Fed says, okay, we are going to allow inflation to run. Why? Because we want things to get more expensive. Why? Because that's what pushes the economy forward. But when you don't have inflation at all and you have disinflation, then it becomes a problem. A problem because now we're going the wrong way. Now it's unemployment becomes an issue. Oh, wait, it already is. Then you have problems of, well, I can't find a job as I get out of school. That's a problem. Well, AI is taking my job. That's a problem. Tariffs are becoming a problem. All of a sudden, all of these things are becoming a problem, and now they're adding up. Now, I have been saying it for a while, and I still can't. I mean, look, when I was a kid, I watched a lot of game shows with my babysitter, and one of them that we always watched was The Price is Right, and there was this one where this mountain climber would continue to go up and up and up and up, and the contestant had to figure out whether or not when to get out, right? To get out at a certain price, because that was the price of whatever the thing that they were trying to win. Let's say it was a washer and dryer, and the price goes up, and it's kind of like the markets, right? Here you are, the markets are going up and up and up, and you're the mountain climber, and you're looking for the right price to get out. The problem is there is a point where the mountain climber can just fall off the cliff, and 9 times out of 10, it was one of those games where the mountain climber usually fell off the cliff. Look, we don't want to do that, right? We want to be there. We want to be, as I said the last little while, the ticker taker, right? As we watch the market's prices going up, why not take some profit off that, right? I'm not talking about with the buyer sell. We don't do that here. But I am telling people, look, are the prices expensive or are they cheap? And I can tell you from experience that right now, the S&P Chiller Home S&P index for the S&P is out of control. And I'm gonna pull that up if I can here, so you guys can get a better. It's pretty much what they call the CAPE ratio or the Shiller PE ratio. I'm gonna try to give that to you now. I'm gonna share my screen here. Go. There we go. This is the Shiller PE ratio. You can see this. You get it from multiple.com. Shiller PE, you get it a lot of places, but I like it from here. I'm going to try to scroll it in so you guys can see it a little better. There you go. All right. Now, on the average, the Shiller PE ratio, this is price to earnings ratio based on average inflation adjusted earnings. So I'm not just taking in the price to earnings on face value, right? Which is, a stock. What's the price? What's the earnings? People, okay, that's great. But I like to get a little deeper than that, right? That's just surface knowledge. So how do I get into the deeper finding out what's really going on? I want to know what the cyclically adjusted PE ratio, which is the CAPE ratio, right? That's a little bit different, or the Shiller PE ratio, better known as the PE 10, for those of us who are that old. All right. Here it is, folks. We all know what happened in 1929. It was the biggest crash in history. But the crash did not happen until September and October. Now, that was a bigger crash. Why? Because this is a telltale sign of when things are going to happen. So this number came out in July of 1929. All right. So when I say, look, the market doesn't just sell off and then that's the day, right? I mean, you can see capitulation day. You saw it a few months ago. But when you're looking at the macro picture of the markets, you're seeing a much different picture of the markets. Now, this price to earnings was based on the 20s getting exciting and everybody was all happy. All right, well, let's go forward. All right. So this is October of 1999. For those of you who don't know what happened in 1999, that was the dot-com era. So we knew what happened. Numbers and prices were outrageous. People were paying outrageous prices. Think of companies like Netscape, things like that fell off the cliff. I don't need to explain that to anybody else, right? And then, of course, 2020, we all know what happened in there. COVID. And then where are we now? We're at 38. Now, just how far away from the norm are we right now? Well, the mean and the mean being all of them, and the median being the median number, mean of all of the numbers that you have on the screen, and the median of what you see, is right here, 1726 to 16, somewhere around 1660, 70, somewhere around there. The very low was in 1920. Right, that's when the boom happened, which was a good time to buy, right? Because you had a whole decade of fun. And then the max was 44.19, the dot-com era. Now, a lot of things are happening right now that puts us and says, okay, we're in a lot of ways a lot like the dot-com era, because you can say AI and things might be getting out of control with pricing of quantum computing or AI stocks or Palantir, stocks that might be getting out of whack a bit. And here we are. And it's telling you that, right? So be careful out there. This is one of those ratios that I do look at when I am evaluating the markets in a way that fundamentally that people aren't looking at the markets, right? Yeah, they're probably looking at it and saying, okay, well, we've got a president who believes in the economy and he's going to help, and he's going to get rid of a Fed chair, and the Fed chair is going to be gone, and we're going to have one that lowers rates, and we're going to do all these fun things. And well, maybe not. Let me tell you why. So in 1929, the Fed chair guy was a guy named Roy Young. Now I'm going to try to pull up Roy Young here for everybody here. Can. Now, share my screen. A little history lesson this morning, I think. Okay. Roy Young was the Federal Reserve Bank of Boston. He had been there pretty much a very long time. He started out in Minneapolis for about 8 years, and then became a Federal Reserve Board governor in 1929. Now, he was there from 27 to 1930. Can anybody explain to me what happened in 1929? Right? Well, there's your answer, right? We know what happened, and he was out the door. He went, and he became the Federal Reserve Bank of Boston for the rest of his life. He was appointed by President Coolidge. Now, Coolidge was pretty much considered to be maybe one of the worst presidents when it comes to the economy, because he didn't have a good grasp of the economy. And I can tell you right now, he really kind of served during those early days of the Great Depression. So when he was trying to understand the markets, now remember, there was no data points like we have today. There's no quasar markets for them to look at, right? But they had a few things, right? They were getting numbers from different places around the country. How was businesses actually, how was unemployment numbers? What were they looking at? But he had a very, very deep, dark understanding of monetary policy. And he thought that the key to monetary policy was the banking industry. He was very, very into the way that they were. Traditional banking of money goes into the bank and the bank decides if you get a loan or not. Not this normal way of doing things now where, third parties can decide whether or not you should get a loan, and then they'll go to the bank. The bank was the place that you went into, and he believed that, and he wanted to get back in there, and he wanted to go back to more transactional settings. That's what we're kind of seeing right now. If we don't see this change that we're seeing right now, it doesn't happen faster, meaning that the way that the federal government is working out of the Congress, we know that possibly Trump said this morning that possibly that he's fixed the problem and that the boat can come back up again and for crypto. But digital banking was what he thought. Roy Young thought, no, I know he didn't understand digital banking back there, but he didn't want to get past traditional banking. So he wanted to go back to it. Now, what happened was the crash happened and he had to oversee it. And then we had a new president, Warren G. Harding, who literally had to go through it. So we had a very tough time right there. When I talk about different times of history, one of the other guys that we want to talk about is Ben Bernanke. Ben Bernanke had the same situation. I'm going to see if I can pull up Ben Bernanke for you. It's a lot easier to understand because Ben Bernanke is more of history as in today, right? All right. So I'm going to share his page. Go. Now, the difference between Roy Young and Ben Bernanke was that Ben was traditional banking. Now, why am I pulling up Ben Bernanke? Well, he served during the bad time, right? So Ben Bernanke went through it. Now, Ben said that he was also a board member of the governors, right? And he pull up here. Now, the difference between Ben and the rest of them was that he also was a professor of economics at Princeton University. So not only did he understand it from a inside situation, but he also understood it from a banking understanding, right? That Roy Young had, right? Because he was a professor of economics, but he also understood it from a academic side. And his teaching, I'll pull it up here. There you go. Well, we can see that his teaching was at the graduate level at Stanford, right? He went to Harvard University with summa cum laude and doctorate of economics from MIT. So this guy understood the economics not only from a banking side, right? But he also understood it from the academic side, and he also understood it from a technology side. So he knew things were happening. Now, he had to serve during the 06, 2010, and that 08 period that we all freaking hate. And he had to go through it. Now, he is a professor, and his biggest thing that he studied was crashes, recessions, depressions. That was his thing. He really understood it. So he did a huge, and I'll show it here, did lots of monetary policy articles on macroeconomics and also on the Great Depression and the Great Crash, under which Roy Young was the chairman. So when I look at what's going on, I have to go, okay, are there other times, other points where the history is serving us in this moment? And look, unemployment going up, elevated prices of stock going up, assets of classes that we never had before, all-time highs. What's going on? The economy isn't matching. Main Street isn't matching Wall Street. Is this becoming another opportunity for gambling? And that's what we're seeing, right? We're seeing people that should not be investing the way that they're investing, and they're gambling on coins, meme coins that have no meaning. They're investing in things they don't understand. People that are investing in biotech stocks that they have no reason or no ability to be able to do it because they don't understand or have the ability right now to be able to knock that down. Now we have that software for you. If you quasarmarkets.com, do it. You can go there now. But when I see this kind of buying, it reminds me of when the the New York Stock Exchange governor, floor governor, had to walk out on the floor during the great sell-off, the big one, the big crash in October 29, and bought stock. He had to do it not once, not twice, but 3 times, and it almost bankrupted him when he was buying himself. Personally, are we going to get back to that? No, because the markets are smarter than that. They're smarter than us. So they say that if the market starts to fall heavily, that there are places that the market will stop and give a pause and give chances to people to get out, and the market will literally stop working. It will literally be turned off. There will be no trading during that period. So those are called circuit breakers. And in those circuit breakers is that moment of pause and reflection of when you think that should you be in, should you be getting out? And this is when the floodwaters begin to happen. It makes people nervous. Markets start to fall. Do you have things on your portfolio to protect it? Are you buying VIX calls? Are you putting in limit orders, stop limit orders in your accounts? Are you doing it? Maybe not. Maybe not. I would tell you that that's one of the things that I would do. I would learn risk management, because you're starting to see some of those cracks that Roy Young and Ben Bernanke saw. Those cracks are unemployment. Those cracks are disinflation. And these cracks are wild speculation on things that really aren't even here yet. And so, look, where am I? I said it on Schwab Network. I said, hey, I am on the sidelines. It is a stock picker's market. There are lots of stocks out there to buy because I think they're undervalued. The mispricing of pricing. I've been talking about that for months now, and I've seen that, right? Do I think that Bitcoin is the key? No, but I do invest in it, and I think it is a part of it, of the next fourth industrial dimension here for us, revolution. But I also think that people are getting a little over their skis here when it comes to investing. I've even seen people saying, oh, look, another new high, another new high, another new high. Are you going to be like that Price is Right mountaineer who goes, oh, look, another high until it falls off the cliff? Yeah. And then you watch those talking heads say, oh, well, I told you it was coming. I told you it was coming. They didn't. They kept telling you to, oh, another new high. Look what we're buying. Ooh, look at me. Nope. That's not what we do here. What I do here is try to make you a better investor, to teach you, to give you the tools in order to get to be a better investor, to understand what you own. That's part of the rules of Big Beat, right? Know what you own, right? Because if you don't know what you own, you can't explain it. If you can't explain to me what you own in your portfolio and why your portfolio looks the way that it does, you probably should change it, right? If I saw the other day, Davey Day Trader, right? Davey was like saying, oh, maybe I should have told my quote financial guy to buy Bitcoin, not all these stocks he put me into. Yep, pretty much, right? Why? Because he was trying to protect him, right? And yet he didn't see that maybe Bitcoin does fall. We went to 123 and went to 116 in less than a day, right? There's a lot of profit taking. Now we're going back up, and I think what we do, I think we make new highs here, because I think that's what digital gold, right? But I also feel that we're starting to see these cracks are not just cracks anymore. They're getting bigger and bigger and bigger, and they're telling you what's happening, right? You're seeing, and I'll post this right now, U.S. June industrial production rising 0.3%. Put this in here. There you go. Industrial production rising 0.3%. Estimate was 0.1%. Okay, so if inflation is lowering and production is rising, right? Output is rising barely, and June cap rate is rising. The cap rate is with utilization, means how much they're producing, and is it are they using all of it, right? So it's pretty much a little more than 3/4 of it. That means that something is missing here. Now, is there a supply chain issue here? Could be. We already know that. There's some issues there. So, okay, meaning that getting it from one side of the country to the next side of the country, or getting it from a foreign country to us. Interesting. And tariffs? China? all of these macro issues that we've been talking about are actually happening. So when I talk about this piece of the puzzle or this piece of the puzzle, sometimes you got to just sit down and start putting the puzzle pieces together and see whether or not that mountain climber is actually going over the edge. Is that mountain climber at the end, or is the mountain climber at a point right now that could possibly be telling you, you know what, maybe it's time to start taking some chips off the table? Now, don't want to be Debbie Downer. Don't want to say, okay, things are really bad. Things are really bad. Things are really bad, because things aren't really, really bad. Now, the old adage, what's the difference between a recession and depression? A recession is when your neighbor loses their job. A depression is when you lose your job. And your neighbor's losing his job. It's happening now, right? It's being taken by AI, right? Ben Bernanke, who served under the .com, right? There were a lot of jobs that were being lost during the .com era. Most people don't remember that, right? Why do I need your job when I got a computer now? I don't need a secretary anymore. I have Microsoft Word. And you look back at the technology time during the 20s, technology was flying very fast. I mean, the cars were really being put everywhere. Believe it or not, the ticker tape itself was introduced, right, on Wall Street. So I'm seeing a lot of similarities to those times. I'm also seeing similarities to the 1990s, the 70s. So sometime in the 70s, we're seeing the same thing. And when you see macroeconomics, in this case, we're now seeing isolationism, where the United States wants to raise tariffs to everybody, and we want to do this alone. We want to kick out bad hombres, and all these things that we're talking about. We're starting to see all this play out again. And it never, ever works out best. Tariffs have never worked out for the best for the country. It's great for a few months, right? We get more money because people still have to buy the products. Do they change their habits? Nope. And then eventually it all falls apart. Tell me another. I ask anybody that has an economics degree, business degree, poli-sci, got them all, to tell me another time that it all worked out during tariff time. Anytime. Pull up a time. I don't care. Show me. Any country, any place in the world. It doesn't work. On top of all of that, tell me a time when buying products and paying higher and higher and higher and higher for it, when this has no actual value, that time worked out too. I can say the Dutch guilder during the tulip time, right? Tulip prices went through the roof until it didn't, right? Because it was really the only thing they were doing was the tulip bulbs. You had to go plant tulips with them. Pretty flowers, right? But didn't really do a whole lot. Today it's Amsterdam's flower, but it hurt a lot of people, and it hurt the country for many decades, and the Dutch banking system pretty much almost collapsed. Right now, today the Dutch banking system is good. So when I talk about all of these things, I don't do it in a way that's just here to scare anybody. I don't want to do that. I want to prepare them. I want to make sure that they understand risk and reward before you make that big purchase in the Tesla, like I do, that investment. It's not an investment for long term, that you're just trading right now. This is a trading time. This is a time to be using your charts, because the charts will tell you. But if the charts are way out of whack on, like, say, for example, Bitcoin, right? When there are no back end to show you where we've been, right? Or if you're looking at charts like NVIDIA, where the PE ratio is way out of whack, when you have your first $4 trillion company, which, by the way, I said we would get to. And I also said we would pass up Apple. It did, because Apple wasn't inventing anymore. All these things, all these little things that we've been talking about on the show are pretty much coming to head. Apple's not inventing. Guess what's happened to Apple stock? Right? Weight loss drugs coming out. Eli Lilly goes up. Guess what happens to fast food stocks? This is what I mean by thesis trading. So put it all together, Big B. Great. Good idea. All right. So if we're seeing disinflation, and we're seeing periods like the past, like 1929 and like 1999, the .com, and we're seeing people just like Roy Young and Ben Bernanke, are we going to see that with Kevin Warsh? Are we going to see that when Powell is gone? Because Powell is gone. Let's be honest. Whether he leaves under the Trump's hand by firing him somehow, whether he resigns or whether he leaves next March, he's gone. So we're in that doldrum period, including the summer. So there is nothing here. There is no catalyst in my mind. Now I can say, ooh, earnings season's here. Great. Earnings are coming up pretty good. Are they good enough? So what are earnings? Earnings are telling what's happening in the past. We already know what's happened in the past. We know that earnings of banks are going to go up. We know that. Rates are up. We know that. Right? They're going to make more money. People borrowing money, they're going to pay more money. They replace that money. Okay. So all of these things that are happening right in front of our eyes. And yet we're still seeing this gambling mentality in the markets. And that's when I go, I have to ring the bell. I have to say, you know what? I'm going to stay on the sidelines for a bit. I'm not going to be like everybody else. I'm not going to be fear of missing out, or I'm not going to be in a situation where I'm trying to find the next stock so badly because I can't stand it not being in the market. All of these things is what makes us a better trader, the emotion. It's going back to basics and understanding history, right? Going back and figuring out who Roy Young was and why he made the moves that he made. Why Ben Bernanke made the moves that he made. Why is Powell making the moves that he's making? We need to understand that because it's a macro side of things, right? Is he going to raise rates? Is he going to lower rates? What's he going to do? Is he going to stay? Is Trump going to fire him? All right, well, we know that there's going to be another Federal Reserve member, a board governor who's going to be president, right? So we need to figure out, the chairman of that board, we got to figure out who that person is. We got to figure out what they're thinking about the future, right? Now, we know that it's probably going to be a little more political because Trump's making it more political. All right, we have to understand that. And if we're seeing disinflation happening, how is he going to fight disinflation? Well, are we going to lower rates in disinflation? That makes it worse, right? Because now what you're doing is you're adding more fuel to the fire. You're putting more people in, borrowing money from the bank at cheaper rates so that you can go buy assets that are already elevated. Now you're exacerbating the problem, the issue. Now you're making a bad issue, a bad situation worse. And that's what scares me now. So when people ask me about, what's the next part of the economy and what's going on, that this is what is happening. So I'm not telling you that the markets are going to go kaboom, kaboom to the upside or down, down. But I can tell you that some of the biggest talking heads, and I was just in New York talking to Dan Niles about it, the second half of the year is going to be bad. So if the talking heads are telling you this, history is telling you this, why are you putting your accounts on margin all the way up as high as you can go, buying stock of things you don't even understand or know? That's what I'm saying, what's happening in the markets right now. That's why I think there's going to be a pullback. Lucky Charts, good morning. I see that you are, there you go. Yes, correct. Yes, high volatility, problems here, right? So what I'm telling people right now is be prepared. Be the Boy Scout, be the Girl Scout right now, right? Understand that the markets are not, this is not a normal market. This is not a place where all of a sudden everybody feels comfortable and this is great. It's this fear of missing out. I have to have my Twitter feeds tuned to financial and every breaking headline. Look, I already got all those. I have 16 screens around me. How many do you have, right? I already know the data. I have the background, the education. I already know all these things. But it would be a disservice not to be able to bring those to you, to tell you what's going on in a way that's a little bit more genuine. And I think the markets in general have not been genuine. They're telling a different story right now. They're telling you a story that everything is fine, that the world is great. Don't worry about anything. Buy the dip mentality. Now, but Big B, you bought the dip. I did. I bought the dip when capitulation happened months back. When people were crying about how the market's going to go lower and lower and lower. Nope. That was capitulation. And a lot of retail didn't understand or couldn't grasp that, right? How did I know? Because I knew it was coming. All right. You still have buy the dip mentality? Great. Fantastic. But wait till the market comes back to you. Let the market be your thing that you control. That'll help you with your emotions. What do I mean by that? Well, instead of buying at tops, buy when the market pulls back, heavily pulls back. When you get that normal correction, 10, 15%, that's when things are a little bit better. That's when you know it's things, okay, all right, I feel better about putting money to work. If I were to show you a chart, and I'm going to do that for everybody here so that everybody understands what I mean by this. Markets are open now. And of course, we're not seeing much. Ticks up 283, and this is Wednesday, so I don't expect much here, right? I don't really expect a whole lot here today. And I'm going to pull up the QQQ chart, and I'm going to do it from there you go. I'm going to do it from a 1 second chart. There it is. Nothing. So if the market can't go up and the market can't go down, what happens? It will find a direction. Liquidity always finds a direction. It will find the closest liquidity zone. So I'm going to pull up a monthly chart. Now, if you remember, not too long ago, I did these for you. I showed you these charts. I put the Andrews pitchfork on it. Here we are, right in the middle of Andrews pitchfork. Now, tell me, in your humble opinions out there, is the chances of going up higher or the chances of going lower higher? I think we're going to get a pullback. Now, I just said 10%. There you go. So 552, 10% will be 55 points. There it is. Pull the number up. There it is. That's it. Remember the capitulation that happened? Right there. That's what I'm looking for. I'm looking for this drop. And I'm looking for this drop to come back. Probably, and we talked about this not too long ago, I'm looking for this drop to come back to about 470, 480, 500, somewhere in this range right here. Because we know that there is a lot of buyers in here. There's buyers all the way back to April of last year, and there are sellers all the way up here. And we have passed up those sellers in the new territory up here, but I still think we come back. So I've just walked you through history. I've just walked you through what I think is going to happen. And we're showing you through data that's happening right now. And I'm not giving you some new meme stock or some hot stock to buy or sell, because I don't think that's right. I think people who are doing that right now are charlatans. And I'll tell them that in the face. Because right now, if you're just buying stock and trying to swing stock right now, that's great, because it is a stock picker's market. But if you're listening to people that are just giving you a stock and saying buy and sell this one, this is what we're doing today because these are options are playing right now, they don't know what they're doing. Because right now they might have a win or two, but they're not seeing the overall market picture here. So I'm telling you, be out there, be careful out there as we go through these numbers. Now I'm gonna pull up McDonald's. My thesis of McDonald's still the same. I don't see anything that's going to push this thing up. $300 still seems to be why, because my thesis is still the same. Weight loss drugs. No one's going to McDonald's anymore. Apple. Last couple of days we've seen a little bit of pump up, but the stock got to 260 back in December. Right now, if I look back in last summer, it did kind of the same thing. Right there, it is. It pushed up, went up in the summer. And so I pulled it up, as you can see here. I pulled up the same thing. There it is, right? And just pitchfork, seeing where we're at. Could be a push up here a little bit, but I don't see it happening right now, right? What else have I pulled up? Royal Caribbean. My thesis there hasn't changed. People are spending money like water. What was my thesis earlier? People are spending money that they don't really have. We've seen delinquencies on cars and homes. People, the housing market's falling apart. They got to spend it somewhere. Guess where they're spending it? On cruises. So those theses gave me every reason to tell you what's happening. So I am telling everybody out there to be careful out there, because this economy, this market, this FOMO is not telling me that this market is healthy. It's telling me the exact opposite. Look at there. Another stock that I told you about the other day. Unity Software. Ticker U. I told you. I like this stock. Why? Because I started seeing it in technology everywhere. Technology, just like in 1929, just like in 1999, and here we are in 2025. Same things are happening. Bad economy, things are happening, technology is changing, and yet people are investing in things they don't really understand. Now I understand Unity because I play the games. I understand Unity because I understand software. CEO and founder of a technology company. But does the average person understand it, right? And I don't think that's the case. All right, let's get to it. The markets are open, and guess what? Exactly what I said this morning. Look at this. Pull up a 1 second chart. Kaboom, we're already seeing it down to the downside already. Sellers are already coming in. But I'm not really seeing much of a move either way. Tick now up 300. We saw that first wave down, backing up a little bit. I'll just keep the cues up here in real time for everybody so they can see it. But right now, I just don't see anything right now. Bitcoin now 118.8 now, holding steady here. Seems like 119 now. Seems up, ticking up 383 now. Silver still falling here, 37.74. A little bit of profit taking, not much. A little bit of profit taking on silver. Gold still slipping here, 33.27. You heard from Peter Thomas talk about it, that for the most part, we need to see gold hold 3,300. Then that'll tell you a little bit more. Oil 65.93, now below the 66 handle. Wow. Oil's telling you the same thing. Oil usually goes up during good times. Why? Because people drive. Why? They need more gasoline in their cars. Why? Because they need to heat their houses, natural gas. All of it, the crack spread. I talked about the crack spread not too long ago. All these things I've talked about are now coming to fruition, folks. I'm not, for those of you who've been following me, over my lifetime, my career, I don't tell people to get out until I slam the desk and I start beating on the desk. That's the telltale sign of big beat, is to beat the desk, all right? The big beat. But I'm not doing that yet. I don't feel like we're there yet, but it could happen at any time. And that's what I'm saying to people, is that as Scott Bauer will tell you, you buy volatility when you can, not when you have to, right? We don't want to see that big VIX spike and you're not in the game buying volatility, right? Lucky Sharks were just talking about that this morning here, post. So, yeah, correct. Just be careful out there as we continue. Dollar now 98.83. If you listened to Steve Flanagan, you heard him talk about the Dixie. Yay, I got to go overseas again. So, he told you, I asked him point blank several times on the show, listening, what's the bottom? 94.50, 95, somewhere in there, but I don't think we'll ever get there. Didn't go there. Tried 3 or 4 times, didn't get there, right? Now we're seeing that. Look at this, seeing the QQQ now, still can't hold here, looks like. $118.8 now in Bitcoin. Nothing moving here. Still seeing VXX and VIX. Still not really showing a telltale sign today. Advanced decline line up 33.54. So we will have a positive day, it looks like. Looks like Dow still about 200 points here. But I don't see anything I don't see anything really telling me that I'm loving this market here. Right now, I believe that people who are not in it, I think right now, I think we can continue to see a little bit of churn, chop, 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 and churn, churn, churn. Those three, chop and churn is what. Yes, those are actual words that we use on Wall Street. Chop means choppy day means going up, going down, choppy day, and then churn means that buy, sell, buy, sell, buy, sell. That churn. So yeah, chop and churn. All right, let's keep going here. Silver still slipping here, 37.71 now. Oil could break above the 66 handle here for a little bit of a push here, as sellers do seem to be exhausted in the oil markets here. Hey, I appreciate everybody out there. Look at the numbers coming in. If you're out there, retweet us, repost us out there. Give me send me up a comment here. I'll repost it for you out here. Tell me you're out there. Give me some love. Howard will be back here on Monday with me. I'm looking forward to seeing him again. Obviously, we've been friends for many, many years, 3 decades. All right. Looking forward to seeing his take. Tick now slipping here down 184. Had a feeling we weren't going to be able to hold here. For those of you who are wondering what the heck I'm talking about, it's this one right here, tick.us. For those of you who's trading view, same thing. You can keep your eye. What do I mean by that? That is the positive ticks and the negative ticks, meaning the buyers and the sellers. They have to match up, right? So where's the match? And it's a negative, means a correlation to the negative side. So negative, the more it's negative, obviously, the more selling you should start to see. Remember every position in the market, there's a buyer and a seller. There's a matchup. But where are the buyers? The buyers are here and the sellers are here. So it's got to match up somewhere in the middle, right? And as the middle becomes this, that's what you see, right? I hope that explains it. Bid and the ask there. A little bit of a slippage there in the Bitcoin as tick slipping even more here. Goldman Sachs' CEO, David Solomon, says geopolitical concerns and pending trade deals remain as risks. Yeah, David, exactly. I mean, he's saying what I'm saying, right? All these things that are out there are concerns that I have, right? That on a more macro level, and if I'm pinpointing other times in history that look like this one, well, there you go, right? This is what I'm saying, and we need to, those who don't heed history are doomed to repeat it. So we need to be careful here. We're seeing now the Q is still slipping here. We're getting walked down here, it looks like a little bit. But it's still a fairly flat day to me. The Dow's only up 130. S&P, SPOOs are only up about 10 points. And the 10-year now 4.47%. So, Bitcoin 118.4 now. Spot gold now 33.27. Looks like a little bit more slippage there. Got to keep our eye on gold here. Silver also doing the same thing, 37.72 here. There's Eli Lilly pushing higher. All of these things we've talked about. Unity up 12% today. We are going to keep our eye here, just a little tighter here on the Dixie here, 98.80 now. We talked about it with C. Flanagan on back on Monday, that for me, I really need to see this, right? So he told you 94.50. We talked about that, right? Where are we going to go back to? And he told you back to 99, somewhere 99.50 is what he's saying. I mean, he has nailed it. I mean, if you're not listening to the show in the mornings on Monday, Wednesdays, and Fridays, he's out today. Monday, Wednesdays, and Fridays, he pretty much told you what was happening. And I liked this a lot. And he said, watch. JPY. It's the old-fashioned way, I guess. There we go. There you go. The yen's falling continually. That's what we're seeing. It's a 1 hour chart. And I want to see it from the dollar sign. There we go. Look at that. So $1 now gets you 148.78. I liked it better when it was at 155 when I was back in Tokyo. But hey, beggars can't be choosers. Q's still slipping here. Q's now down 1%. Let's get those numbers up, folks. If you don't mind, hit that repost button on the stream here. For those of you who are out there, I appreciate everything you guys do. And you guys have really been one of those. You have been. I can feel the love out there from you guys. I really appreciate that because I'm just here for. I don't need to be here, right? I'm here because I want to bring this knowledge that I have learned over 30 years to you, right? The history lessons I don't like always doing, but because it's boring, I get it. But it's always good to understand if we're going to learn the future, we got to understand the past. And this is one of those places to do that. We're seeing Tesla now 317.67. I'm trying to push up a little bit, but the Qs are still selling off here. Tick now down 245. Oil 65.75 did not break to the upside there. And we've been talking about the housing market in the United States being really rough, and with tariffs and everything. You know what country housing is doing well in? You know, Canada. Housing starts are up 3.6% in June, right? That's what I mean by tariffs don't work. When you isolate your own country, the countries that like your country to stay home, they just build their own country. Advanced decline now up by 2,100. So that heavy positive side of the market's slipping here quite a bit here. Tesla's still pushing here, 318.23. We have been talking about Tesla a little bit over the last few days. Pretty quiet here so far. Spot gold 33.26 here. Can it hold? 33.25 now. Can it hold here? Tick now down 232. Now near the lows of the day for the tick of the session. Another drop here in the tick, and we could go right on down. Tick down 400. I have a feeling. Let's see if it can hold here, but not. We could see another selling here. Serious selling pressure here. Tick down 417. Lows of the day. Tick down 428 now. Qs are already pushing lower here. Now on the lows of the day here. Tick down 500. And lows of the day again. Another push to the low downside. More selling happening now. Dow could go negative here in a few minutes. Israelis airstrikes on Syria's Daraa. That's their, yeah. So more Israeli airstrikes. More selling hitting the markets. NASDAQ has now gone negative. Tick just dropped off the map. They're down 900. Secretary of State Marco Rubio says we're very concerned about Israeli strikes in Syria. More selling. Continue to see more selling here. NVIDIA now negative on the day. Not really seeing much here now. It's chilled out a little bit. Tick's now positive 112. One has been killed, 18 injured in the Israeli strikes. Really not liking this market here. This could be one of those. This is a serious slip here, and we could go down pretty quick. Question mark is: are the sellers exhausted, or are they just getting ramped up here? And I think that they are backing off a bit here. But spot gold now 33.22. Now we've talked about gold. Keep your eye on gold as silver continues to slip here too. 37.60, 37.65.8 now. There we go. So it could be a little more. There we go. The sellers are picking up again. Had a feeling that was going to be the case. Here, reports that Jensen has sold another 37 million bucks worth of his own stock. Why? I mean, I don't blame him. It's the highs, right? Why would you sell your stock on the lows? Buy it on the low, sell on the high. They're telling you. History's telling you. The world's telling you. Disinflation's telling you. Everything, all the signs are there. Yet people are still buying stock. Why? It doesn't make any sense to me. When things don't make sense to me, it's usually why. It's what happens. All right. See, there's a little bit of buying popped in there. Not enough for me to think about anything here. And I am not short the market either. I mean, I think people are asking that all the time. Are you short the market? Nope. Nope. I need to see a direction, and I'm not seeing that yet. And it's okay. It is a way to actually invest. You don't have to always buy or sell. You can sit on it, take your hands, as I said the last time, sit on them. And that's what I've been doing. I have my own accounts. They're all there. This is a very interesting point here, right here in the right here, posted in the 10 o'clock hour here. It does not seem that the buyers are wanting to step in here, and the sellers are not pushing the envelope yet. I think they're waiting on the 10 o'clock hour. Let's see what happens here. The dollar now 98 9. Look at that. Look at the dollar now. Ooh, yeah, baby. Getting close to that 99 handle there. 98.85 now. There it is. There's the sellers a little bit. Got about 2 minutes now at the top of the hour. Let's see what they think they're going to do here at 10 o'clock here. I'll stick with you for a little bit. I've run up to 10 o'clock and then I need to run. But yeah. Is this the bottom here going into the 10 o'clock hour? Tesla now sitting at 318.45, highs near the highs of the day. Bitcoin now running here a little bit, 118.7. We'll get it back over 119, be good. Could see a little bit of slippage here. Here it comes. A little more slippage here going to 10 o'clock. Yep, lows the day now. Okay, 1 minute, top of the hour. Let's see what the 10 o'clock hour brings. Is this it? Is this where the buyers step back in? See this right here in the 1 minute chart? Could be some buyers right here. The 10 o'clock could coincide. 10 o'clock now here. Is this where they are, or they would continue to slip? And I can see right there are some buyers stepping in here. There's a buy signal just popped up here. So this could be where the buyers step in, 10 o'clock. All right. All right. Lucky Charts is asking, are we moving to alt season or just rotating out of Bitcoin? Neither. I don't think we're going to have an alt season this year. Most people ask me about that because I was one of the biggest alt players at the very beginning of all of crypto a decade ago. It wasn't probably an altcoin I didn't know about. Today, I don't really care about the altcoins as much because, quite frankly, they're not really doing anything, right? The layer ones and layer twos. So quite frankly, I don't think so. I think the rotation is still into Bitcoin. I think it's the rotation into Bitcoin is institutional, which is what I've always said we need to happen. ETFs, institutional roll into it. The sky's the limit, and I think we still go to. I mean, I've already called it to the 120. I've already got there. I think now we go to 250. That's the next call for me is 250. So I think that's what people are looking to do. But not buying the physical or the actual Bitcoin, but buying it through iBit and ETFs. All right. Hope that answers your question, Lucky Charts. I will see you right back here tomorrow. I've got more interviews today. As you know, Quick Quasar Markets Live is popping. So if you have any questions or you want to hang out with me, I'll send you. I'll do it right here. I'll give you my email address. You can always send me a comment, good or bad. I'll take them both. I'm not scared. But there's my link right there if you want to hit me up. And of course, if you don't have an account with Quasar Markets, you can get a free account, no problem. QuasarMarkets.com and hit that button. Create yourself an account, and we'll see you right out there. And I will see you right back here tomorrow.